So this guy said buy Tesla stock when Tesla stock was at $20 per share. Then Tesla stock went to $400 per share, and then it went down to $160, and then he said buy. This is the bottom. Now it is going to go up huge, and then it did. And today he says that Tesla stock is actually going to well above $2,000 per share. So I will talk about that in the video. And today Tesla stock has some positive momentum. It is up because of these two buy ratings and price target increases. So Tesla stock rises as TD Cowen repeats buy rating. TD Cowen kept its buy rating on Tesla and a $509 price target after visiting Giga Texas and testing FSD V14. They said the rise felt smooth and impressive, which made them more confident in Tesla's self-driving plans. It is really hard to try V14 and not walk away from that more bullish about Tesla stock. And we are seeing evidence of that happening now. And then that pushes Tesla stock up, just like we are seeing today. The firm also said Cybercab is making strong progress. They now estimate it could cost about 30 cents per mile to operate, which is lower than they expected before, which means they have done their math wrong because I've done my math, and my math says that it is going to be less than 30 cents per mile eventually. All you really need to figure that out is just do some thinking and then put some numbers on a spreadsheet and then think some more and then think some more and then think some more, and then you got the result. TD Cowen believes the planned April 2026 production start shows Tesla is confident it can scale robotaxis on Hardware 4. They say autonomous vehicles could become a meaningful part of Tesla's revenue by late 2026. And then this is also moving Tesla stock a little bit today. Stifel just raised its Tesla stock price target from $483 to $508, citing strong progress in FSD and robotaxi as key drivers. So we are now seeing this moment which is unveiling in front of us, which I have been talking about for so long now. FSD is going to be the big thing for Tesla, and we are seeing it from analysts right now because they are directly raising their Tesla stock price targets because of FSD, not because of anything else. It's FSD. They highlight improving Q3 results, expanding robotaxi plans for up to 10 cities by 2025, and major updates coming in FSD V14. Stifel also notes that new lower price Model 3 and Model Y trim should help soften the impact of the EV tax credit ending, while Optimus remains a major long-term opportunity. Analysts are now starting to talk about Optimus in a more serious way. Now, then, when they actually start thinking about it more seriously too, their price targets are going to explode, except they will not be allowed to raise their targets by that much because, you know, putting out a price target of like $2,000 would be absolutely ridiculous. You'll be laughed out of the room if you did that, if you worked at one of the major Wall Street firms. Unless you are someone that beats returns of S&P 500 by quite a bit, which Ron Barron has done over and over and over again. He significantly outperforms S&P 500. His Tesla stock price target is not just $2,000, it's actually $2,500 within the next 10 years. So he predicts an $8.3 trillion market cap, and yes, this is more than he expected before. For example, before Ron Barron saw Tesla worth $5 trillion in 10 years. Now he sees it worth $8.3 trillion. And it's easy to ignore some Tesla stock investors because they seem to be a little bit overhyped and a little bit too excited. However, Ron Barron is not someone you want to ignore. Remember this? This is from 2024, April 25th, when Tesla stock was at $162. Ron Barron goes on TV after having seen Full Self-Driving and all of that, and he was just blown away and amazed. And I've been using FSD for a while at that point, so to me it wasn't anything really amazing, as in this is not new. I understood the technology, I predicted that it would happen, and then it was happening, and then I was a little frustrated that people were not seeing that happening yet, but I'm almost always quite ahead of everyone. Everyone just needs to catch up to what I'm seeing, and eventually they do start to see what I'm seeing as they are right now. But Ron Barron went on TV when Tesla stock was at $162, and he literally said, expect Tesla stock to go up huge now. He was asked, when is it gonna go up? He replied, now. Now is the time, and it did. It sure did, up from 162 to 400 in months. He pretty much couldn't have possibly picked a better time to say it is going to go up big time now. Now is the time. That was the local bottom. And then Cathie Wood has a Tesla stock price target of $2,600, but keep in mind, this is a 5-year target. Ron Barron's is a 10-year price target. So if you look at two people that are insanely successful and manage a lot of money who who have been also right about Tesla stock, what are they saying? They are both saying it is going to go up. Way up. These people have been right before about Tesla stock, and they are putting a lot of money behind their thought process again, and they do believe that the stock is going to go way up. So do you really want to bet against them? And really the biggest bet would be the bet against Elon Musk, because Elon Musk recently in September bought more Tesla stock, and his interest is strongly secure now within Tesla. He has enough control and he will be rewarded economically like no one else ever has been before. But then what is this all about? Peter Thiel, who is relatively familiar and you could say maybe even close to Elon, slashes Tesla stock stake as Elon Musk warns shorts. So this billionaire has significantly cut its Tesla stock position according to a new Q3 2025 13F filing. Now we also know that Elon Musk recently told Tesla shareholders to hold on to their stocks and warn Tesla shorts. And Elon just now addressed Bill Gates also. Bill Gates Foundation dumped 65% of its Microsoft position for a total of $8.8 billion. And Elon said this: if Gates hasn't fully closed out the crazy short position he has held against Tesla for 8 years, he had better do so soon. Now, Elon Musk before has called out Bill Gates that it makes no sense that Bill Gates is so concerned about climate change, but yet he is shorting Tesla stock, which now makes sense because Bill Gates is actually not really that worried about climate change. Literally after years and years of doomerism, he's now saying that people will be able to live and thrive. So he went from, okay, we're all basically sort of or maybe going to die, to we are going to thrive. To me personally, it doesn't matter what stance someone has on climate change, but what does bother me quite a bit is when you say, well, this is such a huge problem, and then you short Tesla stock, which is hurting a company that is trying to solve the very problem that you care so much about, supposedly. I also think Bill Gates is a bit too old to really change his mind fully like this. So whatever is making him change his mind is not, oh, this is not really that big of a problem as they thought. I really don't think that is the case here. However, it greatly annoys me when someone is hypocritical like Bill Gates. Back to Peter Thiel, it shows that his fund sold 207,000 Tesla shares during the quarter, which is a 76% reduction. He still has 65,000 shares. So he had over $110 million worth of Tesla stock. Now he's down to about 26 million. So that position to begin with wasn't actually a big position for someone worth $25.6 billion. Peter Thiel famously co-founded PayPal with Elon Musk and is still close to Tesla's CEO, although their relationship was not always the best throughout the PayPal years. But they both have recently referenced having conversations, and they collaborated in their support of President Trump in last year's US elections, as well as during the transition. So why would Peter Thiel be selling Tesla stock now when Elon Musk said, hold on to your stock? Especially knowing that Peter Thiel is so famous for saying never bet against Elon Musk. It's generally a very bad idea to bet against Elon Musk, he says. Well, the thing was, the sale of Tesla stocks wasn't the most significant move in Thiel's latest filing. The fund's most significant move was exiting its entire stake in Nvidia, selling over 537,000 shares, a position that had been its largest. So even Electric admits here that, to be fair, Thiel's overall rebalancing appears to stem more from broader market fear than from anything specific about Tesla, which basically means this is bullish for Tesla stock actually. Peter Thiel believes that Tesla stock is a better investment than Nvidia because he sold his entire Nvidia stake but kept some Tesla stock. He didn't exit his whole Tesla stock position. He knows betting against Tesla stock against Elon Musk, not a good idea. So Gavin Baker, a chief investment officer of a firm that manages over $4 billion in assets, responded to James Chanos here, who said, what's so ridiculous about this view that Tesla is an AI robotics leader is that you can quantify just how little Tesla is actually spending on AI. For the LTM, it's below 3 billion or less than 1% of the big four hyperscalers. So Gavin, who has $4 billion under management at his firm, which is more than zero, which is how much Jim Chanos now manages for other people because he had to close his fund because he bet against Tesla stock and he lost a lot of money doing that. Gavin here says, yesterday, Chanos posited that Tesla's relatively low capex capex meant that they were not a serious competitor in real-world AI and robotics. Tesla's inference definitionally happens in the car, so their customers are effectively paying for the inference compute capex, which is now probably the majority of hyperscaler capex spend. Tesla's capex might be an order of magnitude higher if they had to synthetically generate relevant driving data in a data center. Customer subsidized vertical integration is beautiful. And what's not beautiful? Shorting against Tesla stock and closing your fund because you lost so much money. That situation was ugly. I was going to say almost as ugly as his face, but I'm going to refrain myself from saying that. This is also why at some point Tesla customers will be able to put their cars into a pool of distributed edge compute and earn money when the car is not driving, same way that, for example, Cloudflare put single GPUs in their edge nodes. The Tesla fleet, as the world's largest, most distributed CDN for AI, and only AI, as obviously can cache content in cars, is a real possibility. BYD will have a similar opportunity and similar inference cost advantage. Beyond the significant inference cost advantage, Tesla has the second largest coherent Hopper cluster behind only xAI in the world for pre-training. You only need one coherent cluster if it is large enough. Coherent cluster size drives capital efficiency for pre-training. No one has been able to match the xAI and Tesla clusters from a coherence, speed, and cost perspective, of coherence being the most important. This is why Jensen described their data center design and execution as superhuman. So here's a guy that bet against Tesla stock, lost a lot of money, had to close his fund, and now says, when you spend a lot of money on something, it is good. When you spend not much money, like Tesla, it is bad, because the only reason why you would spend so little money is because you are not serious about something, not because you are so good at spending little money but getting huge results. That's not a possibility. Why would that ever happen? That's absolutely, obviously impossible. It's not like Tesla is the only company in the world, according to Elon Musk, that is able to spend the least amount of money on EVs, and because of that, make them profitable. There's no other company, according to Elon Musk, that actually makes a profit selling EVs, and only Tesla is able to do it. Using his logic, it would be bad to do that because Tesla is spending less money than others, because that's literally how you make a profit. You make money by spending less money providing the same quality than someone else. Even Elon jumped into this conversation saying exactly the reason Tesla hasn't yet spent more on AI training is that it wasn't yet the limiting factor for FSD. It will be that for Optimus, so we are building Cortex 2 for training. And then Sawyer points out that Jim Chanos shut down his fund in 2023 after 40 years because he struggled to turn his pessimistic positions into profits. His firm managed less than $200 million in 2023, down from $6 billion in 2008. He lost a lot of money shorting Tesla stock. Nobody should listen to him on the topic. Maybe about other things, maybe he knows a thing or two, because it does take something to get to $6 billion under management, but it also takes quite a special someone to lose this much money shorting Tesla, which is a company that's run by Elon Musk, perhaps the greatest inventor of our time. And Tesla has finally, oh, that was a nice dodge of a person that was opening a door. That was a good job done by FSD. But you can go to this link now and you can see live how many FSD miles have been driven. Currently, we are sitting at 6.4 billion, and they also show you city miles, and you can see all of these videos where it shows you all these collisions and everything of how, whoa, that's a good stop by FSD. And you can see how FSD also performs here, missing and dodging all of these dangerous people. And it has a nice explainer here: 7 times fewer major collisions, 7x fewer minor collisions, 5x fewer off-highway collisions. Now, partially it is because, at least with previous versions before V14, anytime you would be in a really dangerous situation, you could not engage FSD. It would not want to engage. It would ask you to take over. Or if I would be going through some really weird construction zone, I would try to put the car in FSD and it would just say no. So that makes these numbers look better, but certainly I have experienced myself already. Some situations where FSD notices something before I do, and that made me feel much safer for sure. Not actually feel safer, but actually definitely did make me safer too. Pretty good job with all this data. 5-star safety ratings from NITA. FSD supervised saves lives and prevents injuries. FSD supervised improves US road safety by over 80%, reducing the likelihood of collisions caused by human error. I don't quite think that this number would be really this accurate. Lives that could potentially be saved per year. Well, potentially yes, but in reality, because like what I just said, FSD, when you encounter an extremely difficult situation, and this is before V14 though, it doesn't want to take on that situation. But with these future releases and versions, that is changing. So do not be surprised if you do see in the data either more crashes or more collisions or more injuries or more stuff like that. I would actually expect it to some degree, because FSD now supposedly can take on all of these extremely difficult situations, and you can sort of put it in the FSD mode even if it's something that FSD previously would not want to take or handle. One thing that FSD is good at is avoiding T-bones, just like what you saw here. I have experienced something similar to this, not quite exactly that bad, but it was nice asking myself, why isn't this Tesla going? This is really annoying. And then I realized why, and I was very happy I was in a Tesla and that I wasn't going. If my car was not in FSD, I would have probably started driving. I don't think I would have been T-boned, but it would have been a very uncomfortable situation, after which I would have been like, okay, I need to park my car and just relax for a little bit. I'm not driving for the next 10-20 minutes. I need to call some people, tell them I love them. Anyway, looking at the data that Tesla is giving us, on average, Teslas, based on this data here, have a collision once every 4.6 million miles, while the US averages once every 700,000 miles. That's a big difference. So even if we say that, you know, Tesla has some favorable data in there, okay, cut it in half. That's still 2.3 million compared to 700,000. And from my first-hand experience, I can definitely say being in a Tesla, especially with FSD on, is definitely safer than just being in a regular car driven by a regular person. And then a senior staff engineer at Tesla shared this with us. After years of dinners with FANG friends, so these are the biggest tech companies like Facebook, Amazon, Apple, Google, Netflix, you experienced the progression of from being seen as nobody to a tier 1 AI company. They always joked, are you still working on full self-driving? Then you sat there quietly eating your own food. For many top AI companies, it's about hosting the biggest parties at CVPR, writing lots of papers, and how well-known AI godparents in the organization. We have none of these. Quietly, we just want to solve singular, most difficult problem on Earth. This year, they all recognize Tesla is doing AI and that Tesla is doing it well. And if not as good, then perhaps actually better as any other frontier companies, not because numbers or papers or podcasts being published, but because of a solid product that delivers the magic. Elon joins the conversation saying people don't yet understand. Well, if you get the latest of a Z version and you drive it in, for example, Texas or California, you will understand, unless you have such a huge bias against Elon Musk that you will be completely blinded. To some people, you literally can show something and then they will close their eyes and tell you, yes, but I cannot see what you're showing me. Well, open your eyes, please. Omar says, when I first tried Tesla Autopilot a decade ago, it was obvious then that it would be possible to drive a car with just computer vision. When I tweeted about it, I got called all kinds of names: liar, fraud, idiot. I even got sued by Tesla short sellers claiming I was part of an illegal conspiracy and secretly being paid by Tesla. Flash forward 10 years, cars are driving themselves with just cameras. Tesla short sellers lost the lawsuit, Jim Chanos closed his fund, and all the haters who said it was impossible are rapidly running out of arguments. Then Elon Musk posted this about the AI 5 chip. Looks like we can bring power consumption down closer to 250 watts, which is a big deal for Optimus. Important to note that AI 5 is a specialized inference chip for the Tesla AI software. That said, it will perform for our purposes much better than anything else available. To borrow Jensen's phrase, we wouldn't use any other chip in our cars and robots, even if they were free. So this is what Elon Musk has been up to every Saturday. He confirmed here. Yep, just wrapped up the AI 5 Saturday chip design review a few hours ago. We are starting to do some work on AI6 too. Michael Dell and I happened to be meeting just beforehand, so I invited him to join. Hopefully he found it interesting. He then continues, AI5 will not be available in sufficient volume to switch over Tesla production lines until mid-2027, as we need several 100,000 completed AI5 boards line side. So it reacts with, on the bright side, it looks like Cybercab will launch with AI4, which currently AI4 owners should be happy about. And if you have been wondering whether to wait for AI5 to buy a new Tesla, just pull the trigger on AI4 car now. Even when AI5 starts going into Tesla vehicles in mid-2027, it's going to be a little while before Tesla releases a version of FSD that takes advantage of the extra capabilities, probably late 2027 or early 2028. If you remember, this is exactly what happened with Hardware 3 and Hardware 4. Initially, Hardware 3 cars actually performed better than Hardware 4 cars, and it took Tesla a little bit of time to use everything that Hardware 4 offered. And Elon here gave us a bit more information about the AI5 chip. This powers Tesla self-driving cars and Optimus robot collapse two programs into one. It's low power, 2 to 3 times better than NVIDIA at inference, and just 10% of the cost. So how many times is this better than NVIDIA? If you just take these numbers, I'm going to teach you a little bit of math, which I'm qualified to do as I was in the top 20 when it came to Math Olympics. You take 10% and then you multiply it by 2 or 3. So you can take 2.5, or if you want to be conservative, just take 2. And you multiply 2 by 10, and basically you get something that's 20 times better than what you could get from NVIDIA. How do you think other companies are going to compete with Tesla? If you don't have your own chip, if you rely on NVIDIA for chips, you are just not going to win against Tesla. Maybe eventually you will have a solution that works well enough for you to have a fully self-driving car, but it's not going to cost as little as Tesla's solution, and that is going to be the end of you. Overall, good day for Tesla stock today. It is up so far as I'm recording it. I believe that Tesla stock is going to well over $1,000 per share, and after that, well above it. My name is Matt Pochis, and I will see you in the next video probably on Wednesday. Thank you so much for watching.